Are you a Canadian homeowner looking to tap into your home's equity? And you're confused whether you should go for a HELOC or a refinancing? Today we're gonna dive deeper into this topic and see which one is better for you. Whether you should choose HELOC or you should go with refinancing. We'll provide you real-life Canadian examples so you can make better and informed decisions. A home equity line of credit or HELOC, as the name suggests, it's a credit card backed by the value in your property. There are pros and cons. Pros, you have a flexibility, like you can only borrow whatever you need. Another pro is the payments. You only pay whatever you use. There could be some cons, like HELOCs are mostly variable rate. There could be fixed rate as well. Reach us out for more information, but mostly they are variable. Another con is you have a risk, like you have a risk with any kind of mortgage. If you miss a payment, you do have a risk to your property. Let's overview refinance. Refinance involves replacing your existing mortgage for a higher value or a higher amortization rate. Essentially, any change you make to your existing mortgage at the time of renewal equates to refinancing. Of course, there are pros and cons to that. Pros, again, you can enjoy or reap the benefits of fixed rate, which depends on the market, could be a beneficial option for you. Another pro is you can do debt consolidation. You can consolidate your higher interest products like your credit cards or personal line of credits into one bigger mortgage where you pay lower interest and you enjoy and save some money. Some cons could be closing costs associated because it's a new mortgage. There could be another legal fee, appraisal cost. Another con could be extended term. Like for example, if you extend your amortization for lower payments, you could end up paying a little higher on interest on a long term. We can discuss your case in details. Reach us out. Now let's compare both HELOC and refinance. Now, in either of the case, you will have access to the funds, where HELOC is actually like a credit card, revolving line of credit, versus a regular refinance is just a solid mortgage, where it's not a revolving, you get one lump sum paid one time. Interest rates, well, HELOC typically, like we discussed earlier, are variable rates only. It could be fixed though, depends on your case. Whereas on a refinance, you do have an option to go just fixed to save money for a few years, then jump onto variable when the market is better. The last part on comparison is costs, where refinancing may involve extra costs like upfront appraisal. There could be some legal cost, just like a regular mortgage you're getting. Let's consider a live example like we did for Sarah from North York. She needed $30,000 extra to do some renovation, which of course was in turn gonna increase value of her property. She had two options, whether either she could refinance, get some money on hand, pay some extra fee for appraisal and not, or she could just renew as is and go for a HELOC behind her first mortgage. We analyzed the situation and we found out that she will benefit more on a HELOC versus a refinance. We help her refinance with a better rate because as a broker, so you get special rates than versus you walk into a branch. And thereafter, once we close, we got our HELOC, which is again a revolving line. Remember, it's a revolving line. You can reuse it once you pay it off, or you can reuse whatever you pay off on and on. She's happy. She just started a renovation. Let's see in future how that benefits to her, but at the moment she's saving good money on that. Now it's time for some current trends going on in Canada regarding homeownership. We all know in January 2025, the benchmark rate with Bank of Canada is at 3.75, and this leads to the prime rate at 5.45. This decrease does allow homeowners to access more funds from their property, but stay tuned for more updates. Now, when choosing between a HELOC and refinancing, well, it depends on your individual financial situation and goals. For example, Well, let's go point over point. For flexibility, you might want to plan to borrow funds immediately, and a HELOC might be suitable more than a refinance. For larger expenses, we recommend a refinance because you can withdraw a larger lump sum upfront. If you're planning or you're already doing your home renovation, HELOC is better because it's a revolving line. You can keep filling it up, reusing it on and on. If you're trying to consolidate high interest debt into a single payment, definitely refinancing is better because you can reap the benefits of fixed rate and you can save for longer. If you require a substantial lump sum for expenses like education or a significant investment, definitely refinancing is better because you're gonna have a stable rate on a fixed side and you can reap the benefits when you invest it for a high yielding product, or it could be anything. If you want a financial advisor, reach us out as well. And if you prefer predictable payments, then definitely refinance is better because you can again reap the benefit of fixed payments. We were working with Alex. He is a homeowner in Oakville. He was looking to get some money out of his property for his son's education. After some analysis, we recommended him to get into refinance because he could reap the benefit of fixed interest rate for a longer period and make his son get into a school for better education. Well, this was our insight, but we always recommend you consult a financial advisor to determine the best option tailored as per your specific needs. When it comes to us, we are AJP Mortgage. We have expert in-house advice when it comes to residential or commercial mortgage or business loans. Reach us out, do not hesitate. We can sit together, do a free consultation for you and make sure which option is better for you, HELOC or refinance. Stay tuned.